low and a lower high. So in the case of lower low and lower high, you will have somewhat like this. Again the high is lower, again coming down, low. Again the high is lower. Okay, so in this case what you can find is that this is lower than the previous one, and this one is lower than the previous one. So every time when the market is coming down and when it is going pushing up, it is not able to reach the previous high. Okay, so what does it mean? That it doesn't have so much of strength to reach to the previous high or cross it. Again when it is falling, it's making low which is lower than previous low. Okay, that suggests that the market is weak, it is not able to sustain the previous low support. So this basically indicates that the market is in downtrend, right? Now we can make somewhat like this, 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 this. Okay. In this case, this is a swing high, this is a swing low, this is a swing high, this is a swing high, this is a swing low, and this is a swing high, right? So what we'll do, sorry, we'll see certain examples that how market has behaved and how we trade based on swing highs and swing lows. Okay, we'll see in the examples. Start business, right? Okay. So on 10th of the month, what we see, we'll see that previous day, how the market was on previous day. So the market on the previous day was not bearish, it was somewhat bullish, right? You can see that the close is higher than the open, right? Here. So on 9th, if we see, the market is not a bearish sort of a market, it is sort of a bullish, right? So based on 9th January, what will I bias on 10th January? So based on 9th January, the market is bullish, it is not bearish, as the close is higher than previous day close and also today open, right? So we'll consider it as a sorry, bullish close. So next day we'll expect that on 10th of January, the market will be bullish. Okay. So when we are seeing by the first candle, which is of I think 9:15, is a red candle. So what we'll concentrate on swing low. Okay. So for yesterday, you can find this one is as one, this one as one of the swing high area. This position is a swing low. Again, this one is a swing high, right? So once as I have a view that the market should be bullish, but what happens if market goes below this swing, yesterday's swing low, right? So if market goes below this swing low, then we need to look for a short trade, because what happens if the swing low is broken, it means that whatever our view was, it has been negated. The market has not acted as per our view. Okay, so we need to take that contra call as per our view. So if you see the candles, it is going down, and we see that yesterday's swing low was at nearly, I'll just mark it, horizontal line, this one, right? This place. So we'll see that once this area is broken on the downside, okay, and again retested, but fails on retesting, we'll initiate a short trade. Okay. See, this is what we are calling retest, because see it has came to this area. Okay, this area. You can mark this as an area also. It will be better to mark it as an area. this one, this piece like this, right? Small area. Okay, we'll consider this. So this we can mark it as a swing low area. Yesterday area we can mark as a swing low area, this area, the small points, okay? So what we are noticing that when the market is coming to this area, the price is moving up. Means the market is somewhat providing a support at this area. But we need to see the further candle. Okay. Sorry. Again at 1830 level, we are seeing that the price is getting rejected. Okay. So what has happened? The price has came to this area. From here it has got slight support, but the price was not able to push higher. Again we have seen the rejection candle. Rejection candle means what? You can find this is called as a tail. Okay, this line is called as a tail, which means that market somewhat open over here, went to the high up till 1830, but it was not able to sustain, and the seller has pushed it back to 1810. Okay, so till now it seems that it is going to break that level, right? No, see, after this the level has been broken. So what does it mean? That it has tested here, it has tried to move, and this level has been broken. So once this level has been broken, you can initiate a short trade. And what will be the target? My first target will be this one, right? This area will be my first target, this area. And the second target will be this area. This area is because it is yesterday low area, which will be my next support zone, right? And day before yesterday, sort of a swing high area. Okay, this can be this area. This area is, you can see this area is also yesterday's swing high area, right? The day before is, you can see this line or this area is also swing high of 6th Jan. See, swing high of 6th Jan. So this is one of the area from where the market can revert, sorry, and can act as a support level. And if this is broken, it will go to next swing high area, which is this area, right? This is the area. Okay, now we'll see how the price behaves. And the stop loss will be over here at this point, right? 1831 will be your short stop loss. You will short below this, that is for 18,000, right? See, again what is happening? Again the price is trying to go up over here, and again from the same position or from the same level, 18,007, 18,008, the price is being pushed. So what is it is what is it presenting is that again, sorry, again the price is not able to sustain above this 18,010 area. Okay, whenever the price is going to 18,010, the sellers are selling it and it is pushing it down. So this area is acting as a resistance area, right? So what we'll do now, once this red candle is formed, we'll put the stop loss over here, right? So the now stop loss has came near at a cost to cost position now. Okay, and now see with the trade. See, trade has come over here. Again over here, we need to cross. Okay. Okay, your first target is achieved, right? So here you can get 50%. You can get out of 50% of your position. The rest you can carry for your next target over here, and you can trail your stop loss to the cost point. The cost of this is over here. You can place the stop loss over here. Okay, that will be okay. See, you have got the target, second target also. So you can exit. So both the target has been achieved. Now we'll see the trade for the next day. Again, we'll see a couple of more examples how it goes on, right? Our target has been achieved. We have already exited the trade now. See, now what is happening today? The trend is negative. See, you will find a lower high and lower low is formed, right? Now this is yesterday trade. Again, this is 11th Jan trade. Now what we need to check for this one is, now we need to check whether this low is broken or not. Okay, we need to check whether this low is broken or not. See, this low has already been broken. But what we are waiting for? We are waiting for a reversal or a rejection of price to short it. Okay, rejection is price what? Once the market goes down, again it tries to pull back, and once it's come to any swing high or swing low level, and from there the price is getting rejected, that gives a confirmation that we can go short on a trade, as still a lot of seller is present at that particular place, right? See here what has happened, the price has gone down. Okay, but we have not got any rejection candle, no rejection candle was formed over here, and we have seen that the price has jumped back to day's high, right? In this case what we'll see, that we had a view that the market is in downtrend, the market should go down, but what has happened, market has gone down, it has broken yesterday low, but there was no rejection candle. Means it was not like that, that the price has tried to come near 17,860 and got rejected. Okay, there was no rejection candle. These candles are not rejection candle, these are not rejection candles, right? The rejection candle is inverted hammer, that is a rejection candle, right? This is not a rejection candle, but we see a very strong green candle over here, means a lot of buyer has came and initiated buying over here. So we need to check for yesterday's swing high, which is this one. This one is one of the swing high. If market comes to this level, that is, I'll mark it over here. If market comes to this place, try to consolidate it and again break it, we'll go for a trade, long trade. Now we'll check it first. See, now what has happened? The second candle has gone red. So now I need to see a couple of more candles. See what is in this, what it means, that somebody has pushed the price high, okay, and again the price is been pushed lower by the sellers. We need to see a couple of more candles, so it's okay. See, again it has been pushed to that high. So basically what is happening, that we can consider this as a important level, right? Because we could have taken this trade over here also, okay, for our next swing high, but we are not taking any trade here, because this level is already 17,938 and swing high is at 17,968. that is only 20-30 points, right? So the risk reward ratio will not be good in this case, so we are not going for this trade. We'll just look for this level to cross, and then we are going to initiate a trade, right? See, the market was not able to cross yesterday's swing high, so you can see that how swing high is acting as a good resistance, and it is not allowing the market to go up. So now what has happened, that market, I'll consider this swing high and this low as a range. Okay, so between this range I'm not going to trade today. Okay, because you may get trapped in such cases, because the market has already made a high, it has tried to go up, again from up it is meeting a low, so market doesn't has a clear direction today. So in these cases, going for a long trade is difficult, or a short trade you can go for a very small targets in these cases. Okay, and if anything happens after 130, I'm not going to take any trade 130 or 145. The market is not doing nothing, it will just eat your stop losses, right? Okay, so no trade today. See, if we would have not considered this swing high as a resistance and would have taken a trade over here, okay, we would have got hit as stop loss over here, right? And in this case swing low, once the swing low was broken, and if you have not we have not waited for a rejection candle and have gone short, again our stop loss would have triggered. So it's always better to have a double confirmation before a trade. Now I'll go for one more example. In this case also, what is happening? It is nearly swing high. Okay. Yesterday market was a sideways market, so I'm not taking any clue whether it is a bearish or a bullish. I'll just go on based on the price action, totally price action. Sorry. If market goes below this, because this is swing low, right? I can try to retest and gets rejected. I'll go for a short trade. See here. Here it has broken this, right? But the thing is that I need to see that whether it is getting rejected or not after this. Here you can see another trade you can take at near yesterday low. See, this has been broken. It has marked area. One trade can be initiated over here, right? See, this is yesterday low, right? So here what happened? Here also the price has moved from here. It has gone there. This is also that area, swing low area sort of, right? This range I'll mark it. This area, right? But what has happened over here? The price has came over here. It has gone over here. From here the price is rejected. But what has happened? It has not retested this area, right? So see, if you have a little more experience, huh, you can take this trade based on what I'll see. See, market is coming down over here. This is yesterday swing low, but sorry, after a swing low, what happens? The price has pushed up, but the price is not able to cross it 17,900 level and is getting rejected from there. So in that case, you can take this trade, but this trade is not a very high probability trade. That is what I'm going to say. If the prices could have came over here, again went over here and has been pulled back down, that would have been a good and a high probability trade. So it didn't happen that way, right? It has all of it has came over here. But what happened? This level is also a yesterday day low level. So this is also important level. So what had happened? The market has gone down over here. Okay, again gone up over here, right? Here also you can see here it has gone up and you can see a rejection candle over here. So here also you can take an initiated trade over here, keeping stop loss at the high over here, right? Means what I'm saying is that you can initiate a trade the low of this candle just at the close of this candle over here at somewhat nearly 17,826 level, and you keep the stop loss this red candle above. Okay, 11 point stop loss, and you can go for a trade. It has gone up, but over this high is not crossed, so stop loss is not triggered. Again, it came down. It came down to 17,795, and you have shorted at 17,726. So nearly 30 points. The stop loss was of 10 points, and it has already come nearly 30 points. So 1 to 3, you have already got it over here, right? But what can be your target? That is what I need to check. So I need to go previous to low also, previous day charts. I need to check that do we have any. Yeah, this level can act as a your next target. That is 17,797. The market is reverting from this place. Yeah, the market is also reverting from the same place. So here you can book the target because already you have got 1 to 3. Or if you want, you can pick half and trail half, whatever you want. Yeah. So even if you would have trailed half and you would have put up stop loss over here, the same place, and You should have booked over here, because here also you would have got 1:3. It was good to book over here. Okay, so this trade is also a successful trade. So this way you can check all the every day you will find more similar patterns are we are going to make. Some days you will not get the trade. If you are not going to trade, don't take it. It's not necessary to take trade every day. But once you get the trade, you get a good risk reward ratio trade. Always keep a risk to reward as minimum as 1:3. Okay, if you risk 1 rupees, you should get at least 3 rupees. That is 1:3 trade. Okay, so if you see here also, now I'll be a bit faster. Okay, to explain it, you can find that here this one is the swing low of yesterday, right? So you'll find that the market is going over here again, hovering near this. Okay, again it's going over here, and from here getting a rejection. So this is the place where you can take a trade. This can be your stop loss, and you can go for a target of this point or this point, something like that. Okay, yeah, here you got the target. Okay, now we'll see the next day. Again the day is bearish. The next day if we see the market is going up, but the previous day was bearish, I will look for this level. How this swing high is crossed. See, it is going on crossing it. I don't want to continuously cross it. I want it to consolidate at that price for some time. Then we need to break it. If it goes in a stance, अगर एक stance में जाता है ना, हम उसको छोड़ देंगे. ठीक है, वो ट्रेड छूट जाए कोई दिक्कत नहीं है, फिर मिलेगा ट्रेड, विल टेक इट. बट दिस ट्रेड्स आर नॉट वेरी हाई प्रोबेबिलिटी ट्रेड, एंड हियर इन दिस केस ना रिस्क रिवॉर्ड भी ठीक नहीं बैठेगा. हम इसका स्टॉप लॉस कहाँ लगाएंगे? सो ऑलवेज ट्राई टू ट्रेड ऑन अ स्मॉल कैंडल. कैंडल स्मॉल रहे ना, उस पर ट्रेड करने की कोशिश करो, तभी जाके मेरा प्रॉपर स्टॉप लॉस लगेगा. Yeah, I missed this trade. Okay, then I'll take the example of last 2 days. Where it would have taken. See, on 25th. On 25th, what happened? The first candle, this candle was so bearish. The first 15-minute candle that is broken the lows of yesterday, day before yesterday. Okay. So we'll look for now at a level of 18,015, which was a low of 20th of Jan. Okay, because the 23rd Jan, 24th Jan, all the low was broken. So if we see any reversal from this low or this low retest, then we are going for a short, right? See here, markets came over here, it has done a retest. It has tried from here, it has tried to move up. After that, again, it has fallen down. You can see this place also, I think. This is low, right? No, there is no retest over here. This place retest over there. Yeah, this place the retest was there. It has came down, tried to move up. It has gone a bit higher again. This whole small green candle was engulfed by this red candle. So this is also a sign of a weakness. We can short it over here. What has happened? Market has fallen. The first candle was a very big candle. The first candle has closed before 2 days low. Okay. Then we can find that the low of 23rd January, that is nearly 18,015. Market has came to 18,015, has made a very weak small green candle. So it's showing that market doesn't have strength over here to go up. Again, it has tried to push up till 1828 and it was sold, and that too with a big candle. So here we can go short over here, keeping here this one is the stop loss, right? And the target will be big in this case because the market is falling very heavily. Let me see where the target will be. 18,005. We can go for a nearly 18,000, 17,900 target, or 17,950, somewhat like that, a multiple of 50. Or we can go back and we need to check that where was the another last swing low. Yeah, last swing low was over here, 17,925. So we can consider 17,937 to 17,930. We can make correct time. So you can consider this also. reversal zone or a support zone. So we can book a profit over here for this short. Yes, see, target is easily achieved. Huh? So you went short over here, right? That is 18,000 level and was easily to get. You easily get 60-70 points over here. Okay. So this is a very high momentum, high probability and a momentum trade. We will get your target very easily and very fast. Now again the next day, again it was a very weak opening. See, the first candle was very big. Okay, again we'll wait for somewhat a reversal sign and then we'll go for a short. Here the market has fallen. Market is trying to revert it. Again market has fallen over here. Here you can see this candle is a very bullish candle. Okay, so if the low of this candle is broken, it means that market is very weak and it's going to down. It's going to move down and also very quickly because this is a very bullish candle. It is a big green candle engulfing the previous candle. Okay. See here what is happening. The market is trying to move up, but here we are getting the rejection candle. So once this low is broken, you can go for short over here. You can get a good target over here also. So that's all for today.